Everybody, welcome to the National Real Estate Post. I'm here obviously with our good friend Barry Habib. But before we get started, Barry, got to let everybody know that Angel Oak is doing again another webinar, the same topic. It's the new business toolkit. This webinar series is going over really well because we're in a constricting market with the pipeline and across the country with respect to your typical QM deals. But yet Angel Oak, I don't know, I'm sure you're aware of this, Barry. Angel Oak has
growing.
Like at 90%, the non-QM segment is exploding while the QM portion of the industry is constricting. So you want to get on this webinar. It's New Business Toolkit because that's where a lot of LOs are making up their losses in other areas as they're jumping into other products. And non-QM is awesome right now, and Angel Oak is the best at it. So there's a banner here on your screen. Over on your right, get in there. It's this Thursday, I believe, so it's right around the corner. You're going to want to get registered right away for this one. It's a great webinar series.
Frank, it's a great point. It's well worth attending. I have been on those Angel Oak webinars as well. They're great. It will really help you for additional sources of revenue that just wouldn't have had. So
correct.
Really, really worth considering.
Awesome. Thank you, Barry. So with that, let's dive into this. I wanted to chat with you specifically about a particular item because I saw your video on it when it happened. And of course, we've had a couple of videos about it. And I'm going to bring up the Zillow thing again. And I'll kind of tee this up. And really what I want is for our viewers to hear your side of this and hear what your thoughts are on it because I think it's an important piece. And so I'll just kind of open this thing up and then hand it over to you. Obviously, if you're in the mortgage real estate space, you probably know by now, Zillow indeed bought a mortgage company. I know the initial press that came out of that from them was, oh, this is no big deal. It's going to be for our instant offers. It's just a little thing we're doing, yada, yada. And that's a story that you're probably going to hear, from the salespeople at Zillow calling you up to get your marketing dollars, right, so that they can send you some leads. However, shortly after that happened, their CEO was on Bloomberg, and the interviewer said, hey, man, even though you bought this mortgage company, your stocks are down. Maybe the investors don't like that. And I know there's reasons for that that we may or may not get into. But the point I wanted to make is understand this. When the CEO of Zillow is doing an interview on Bloomberg, he's not talking to the real estate mortgage professionals out there. He is indeed talking to the shareholders at Zillow. And he is making a very clear point to them. And his response to the interviewer is, hey, 150 million people a month come to Zillow, and I think a lot of those guys need mortgages. So very clear statement that this isn't just a little thing that they're going to do with this little instant offers that you don't have to really pay attention to. No, this is, we want to offer mortgages to everybody who comes to our website every month. So my thing is we've got all these mortgage and real estate professionals out there, but let's focus on the mortgage guys right now. A lot of mortgage professionals out there that share marketing or do direct marketing, share marketing with realtors or do direct marketing with Zillow, where they are sending Zillow money every month to get leads. But now I just think that everybody has to have the understanding, the revelation that, wait a second, I am now taking my hard-earned money and giving it to another mortgage company to send me leads. So I'm helping to fund this new mortgage company to grow and get better and become more effective at basically selling mortgages to everybody that visits Zillow on a monthly basis, which is 150 million people, which, let me tell you, every single loan officer right now that has a pipeline, I guarantee you virtually everybody in that pipeline has gone to Zillow, okay? Virtually every one of them. So I just think it's not very wise at this point for the mortgage industry as a whole to continue investing in Zillow. That's just my thoughts. But I know you have some thoughts on this too, Barry. And of course, the most important thought that I want to hear from you is, what do we do to counter this? Or what do we do with this in mind? So if you could give us your insights.
Remember, video killed the radio star, right? So, this is evolution. So I don't think we're going to be able to easily stop the flow of funds going in there. Look, certainly can be boycotted, this and that, whatever you want to do, that's fine. But while that may very well be a very good idea, I don't know if it's going to stem the tide because they have gotten so big and there's so many eyeballs and there's so many advertising dollars that are there that they're not fully dependent upon those funds that they receive. So listen, I think let's understand the reality, and let's really focus on the things that we can control. Okay, so just like I said, video killed the radio store. This is like an evolution. It's not just Zillow. Amazon's got many more unique visitors, and they're coming as well. Remember, people thought Rocket Mortgage when that came out. So you and I both said, hey, this is the beginning, not the destination. Okay, can I tell you something really interesting?
Yeah.
There's something that you stare at probably 500 times a day, maybe 1,000 times a day, and it's not your kid. It's not your significant other, the person that you love. It's not something at your job. You know what it is? It's this thing here. Okay.
Yeah.
Think about staring at something 500 to 1,000 times a day, every single day. Okay.
Yeah.
Just think that in. Now, do you know that 11 years ago, this thing didn't exist?
Wow.
It didn't even exist. So think about how fast the world changes. Think about Moore's law, which says it accelerates at a 10-to-1 pace, meaning what you learned in the past 10 years was more than the previous 100 years. So what are we going to be looking at in a year or two from now?
Yeah.
The future is happening now, okay? And it's happening quickly. So what can we do? It's all about conversion. So you have to do work that's unscalable. You have to do things that Zillow isn't going to be able to easily do. And by the way, I don't know if you've seen it in your inbox of late, but do you notice all of these pre-qualification tools that Zillow has now started to initiate since they purchased this mortgage company? It just started happening this week. All these emails, let me pre-qualify you. Let me show you these different. So you really have to be better at conversion. You have to offer more value. And I know we all think we're in the mortgage business, but the truth of it is that nobody wants a mortgage.
Right.
They want a big payment. A mortgage is a vehicle. It's a vehicle that uses money to purchase real estate or to finance real estate. So if you have to understand that if you truly want to increase conversion, start by understanding the business that you're in. If you're a real estate agent, what you really have to do is not sell the features of the home, but sell the financial opportunity. Do the things that Zillow can't do. If you're a mortgage professional, do the things that Zillow can't do, that Rocket Mortgage can't do, that no one can do. Otherwise, you're going to wind up, we've talked about this, travel agents used to be on every single corner, but they got eliminated because their functionality was replaced by technology. Do the things that technology can't easily replace. People still, even if they're a millennial, will respond very well if you're able to help them understand the financial opportunity that exists. People are still afraid to buy a home. The media does a very good job of scaring the crap out of people so they don't buy a home, saying how bad it is. I mean, look at people like Dana Olick, who's been harping on the horrors of buying a home for the past 6 years. I mean, could you imagine? Imagine if you listened to this woman, how much money you would have lost. Okay, so she's very negative, as are other people, and it's the media's job to be negative because that garners eyeballs. So when we can talk to that customer and we can show them the financial opportunity, it really makes a difference, because here's what happens is that people get caught up in the minutia. They get caught up in the eighth in rate. They get caught up in the $3,000 or $4,000 difference in purchase price. And I know depending on your market, they could be different. I get that, okay? Just trying to point something out for many of us. And what they don't recognize is if you take that monthly payment differential, whether it be an eighth or $3,000 or $4,000, you divide it in what it comes out to on a weekly basis. You divide it into daily. It has no impact on anyone's life. In fact, they don't remember. You ever do somebody's refinance and they didn't do their loan with you, and you say, okay, what rate do you have? 4 9/8. I don't know. They have no clue
right.
what it was, yet they drove that originator crazy. So we really have to do the things that we have to work on is showing people the opportunity that there is in the real estate market, really breaking down what financially can benefit them by the counseling that we could give. That means doing a lot of homework, a lot of education, understanding that, getting tools that will help you do these things. I think that's really critical now more than ever. There's a lot of free stuff that was going on before. Refis were rolling up to you for free. Now
right.
refinances are their lowest number of refinance applications in 20 years. People talk about margin compression. Margin compression is simply the fact that you have more capacity than you have business coming in the door.
Sure.
So how do you try and influence more business? Drop your price, lower your margin. You need to try and generate business. Will
right.
margins come back when more refinances come out there because rates drop? You'll probably see margins expand a little bit, or companies consolidate. I don't wish that on anybody, but as companies consolidate, you can see margin expansion a little bit.
Yeah. So, it's interesting because you brought up even millennials, still, even though they're they grow up in, I don't have my smartphone near me, but even they grow up in this smartphone world, and they're just clearly a prime target for all the new ways that they're going to be marketed to Amazon, Facebook, Zillow, whatever. But you said that they still want to know more, right? They still desire to be educated a little bit further. And this stands, and I don't remember when we talked to my daughter, who was, and we had that little interview with her, and then I did another one with her on the way to Boston, and I flat out asked her, how would you start the process? And she said she's going to be subject to all that inbound technology and use technology. That's how she would start the process. But then I asked her, well, wait, if you had a friend who just went through this and you knew that the friend just went through this, would you ask that friend something? She says, oh, absolutely. I would definitely probably go to my friend first if I knew that they just went through this. And so, and that's where I think we have the opportunity to catch somebody, because at the end of the day, regardless of all the technology and how it's being presented and how people are being bombarded with it, I think still at the end of the day, regardless of your age group, when it comes to something like this, I think you still would rather talk to somebody. You know what I mean?
Underscoring what you're saying, social confirmation, that's the whole idea of Yelp. So Yelp, you would think is a high-tech kind of business, right?
Yeah.
So the whole Yelp premise is social confirmation. Now they use technology to bring that about, okay? But still, it is social confirmation. Your friend, your coworker, your neighbor, whomever it is, it's social confirmation that this is a reliable reference that's coming to you. So what you have to be able to do is provide unique services that are unscalable, that people want to make sure they tell others about, and explaining to people how they can create wealth for themselves by purchasing a home and what it's going to look like. Look, we talk about Zillow. How did Zillow get created? By telling people what the value of their home could be, would be, okay? And these estimates weren't even accurate. And yet it helped the fundamentals of this company grow because people thirsted for this no matter what their age was.
What's my house worth? What's my house worth, right? Yeah.
Give the people what they want, okay? It's pretty darn simple.
Yeah.
You think that somebody doesn't want to know what the value of their home is going to be, if the market's a good market, if it's a good investment, if you're able to understand that you are truly in the real estate business using money as the vehicle to create wealth, finances, that's the business you're in. Treat it that way. And then that's the unscalable work that it will be very hard for these others to compete with. Now, look, you're going to lose market share because no matter what, there's more entrees from these technology companies into, they've got so much money and so big of a budget and so big of a reach and so many eyeballs, they're going to take market share. What we really need to do is take a lesson from the stockbrokers out there, which as this happened, a lot of stockbrokers thinned, but those who remained advisors did exceptionally well.
Interesting.
Be that person that does exceptionally well as a realtor, as a mortgage professional, if you treat it as an advisor. And don't talk as cheap. Don't say you're an advisor. You truly have to do the work. Look, this is the great thing about sales. Sales is fair. You don't have to bench 400 pounds. You don't have to run faster than somebody else. You don't have to jump higher than somebody else. You don't have to throw further than somebody else. This is all about what's in here. It's about heart. Now, I can have all the heart in the world, but I'm not going to be able to beat somebody in some athletic event if they're just faster than I am or stronger than I am or better skilled at that. If you have heart in sales and I'm willing to put in the work, there's fair results that come of it. And that's the difference. That's how you win at this game, by being smarter and putting the work in.
Don't be a mortgage loan originator. Be a mortgage loan advisor.
Yes. Don't be a salesperson. Really. Do you want to
be an advisor?
You have to, you can't say it. You have to put the work in so that what you talk to them about on the phone offers something that they say, wow, what else am I going to miss if I don't work with you? The insights that you can put into and give people are what's critical. And there's tools out there that'll help you do it. You still have to put the work in. You have to invest in yourself.
Obviously, MBS Highway, one of those tools, probably the best one for this. So, and this isn't an MBS Highway pitch. It's not an MBS Highway. I know you get leery of that. You don't want me to be like pitching you. And I'm not, guys. I'm not just trying to pitch MBS on this show. This is a genuine thing. And his product genuinely can help you become that advisor instead of just having it a name in reality. So I'm going to put a link down below to MBS Highway. You can try it for a week for free. But this is serious stuff. because everything that Barry has just said is the God's honest truth. This stuff is coming like a freight train. It is here. It's already rolling over our heads. So the sooner that we can go from just an originator, right, to a genuinely educated and an intelligent advisor, the better, in my opinion. So
yeah, you have to.
Go ahead and close this up. We're going a little long, but close this up.
So what I wanted to say is, listen, the real estate market. Okay, so my forecast for this year was below where we were trending. You know, so we were a bit conservative. It looks like it's coming back towards what our forecast is. There's a very important distinction here. Okay, when you see things like housing starts slowing a little bit or sales slowing a little bit, it does not mean that home prices are going to decline. When you see levels of appreciation declining, remember the key word there is appreciation, not depreciation. We are not seeing broad-based price declines. That's very different than someone asking price at a crazy level and then coming back down to earth. Listen, we've been in an incredibly strong market, okay? Let's go back a little bit in time. Wasn't it normal for the seller to offer this, the buyer to offer this, and then you get a little negotiation? Wasn't it normal to see some initial price offerings and then price reduction? Let's advertise that. Oh, new price. This is not a bad thing. This is normal, but it's been so hot that it feels like, oh my gosh, this is
not normal. Yeah.
We're just coming back to a more normalized marketplace. Now, individual markets around the country,
they vary.
Of course. Okay, so, but overall, the housing market's in great shape. Look at just the delinquency reports that came out. We're not in the position that we were when you saw these enormous declines in the housing market, where you saw, you know, a house of cards, where people who shouldn't have gotten mortgages or the amount of delinquencies were bad. Here, you don't have one person who's not qualified to own 6 homes. Okay, you don't have that anymore. People are qualified. Delinquencies are at their lowest levels. Do you know in foreclosure, 0.5% of homes with a mortgage, but a third of homes don't have a mortgage. That means look at 300 homes, only one's in foreclosure. God forbid, don't want that person to be in foreclosure, but that's a vast difference than what we had seen in the past. Even regular delinquencies, not bad at all. I mean, we're in a healthy housing market that is not as hot as it was, probably not going to be as hot as it was, but that's okay because it's pretty sustainable this way.
Good stuff, man. Appreciate it, Barry. Thanks for the insights.
You bet.
Use that information, guys, in your marketing and your conversations in your role as an advisor. And hopefully things go well for everyone. Thanks for being on the show.
The thing of it is, the truth of it is, and you're listening to this, you see me come on, you see Frank every day, see Brett. The truth of it is I want you to know they care. I care. Okay. We're doing this because, and we're talking about things this way because we care. We want to see this industry do well. We want to see you guys do well. We want to do well. Okay. For us to do that, you got to put some of that work in. And we're telling you from the heart that this is the stuff that it is good for us to be doing.
Great stuff, Barry. Thank you very much. You guys do us a favor. Leave us your comments down below. Try to get to those. Barry does as well. Forward, share, and subscribe if you're meeting us for the first time. We'll catch you guys later here at the National Real Estate Post. Thanks, Barry.
Thank you.